a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Oh, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Hi, everyone. Basil Chapman sitting here for Tom O'Brien. My pleasure to be here, to be the host. It's an honor and a privilege. And, of course, we will go through all the numbers and look at what has happened today, what we are anticipating, and as a technical analyst and as one of the hosts here at TFNN, my actual time slot is 11 o'clock until 12. I have the Tiger Technicians Hour, Eastern Time, every day, and the number to call is 877-927-6648. These are numbers we should know. We mention them enough times during the day. And here's the other thing. In the context of the market, this was a pretty important session. And as far as the technicals are concerned, let's go through all these different aspects. And, of course, we have programming here from 9 in the morning. Steve Rhodes starts the day, and we go right through until 6 o'clock where Tom ends the session. Now, what's really important about this particular session is that the Dow had a little candle close. That's the candle itself, but the wick was rather long. I call it a long-legged doji candle. The high today was up at the 17,120 level. The low was down at the, let me just check that out. The low today was at 17,006. So that's quite a range. And at the same time, we closed only up 5 points in the Dow at 17,060. Now, in my work, my work is based on what I call the Chapman wave methodology. And the idea is to identify the lowest, most obvious low bar and then merely count each 4 successively higher peaks. And I label them uppercase A, B, C, and D. When you get to D, certain things can happen, and that's where it becomes very important to assess where we are, what we're doing, and what exactly is the status of the chart that you're following. So let me just show you something that I've already done for my subscribers to my opening course. My daily service goes out starting off at about 6:30 or 7 in the morning. I start sending charts out, and at 8:35, goes the last chart. It's called the Trader's Corner. That's where we have all our positions where we might be changing the stops on long positions or the buy stops on the short positions. It's a very comprehensive look. I also have about 17 bullet points, 16 bullet points, and I include the GLD, the TLT, the diamonds, the SPY, and I give parameters of what we're looking at there. Well, this is the report for tomorrow. And the Dow closed at 17,060, up 5. And we made that leg D. Well, look at this. A beautiful up channel was on its way. There were certain 9-day cup formations that went to new highs, 2 in a row. And this last one was only 5 and then went to 6 today with an all-time high at 17,120. That is important. Why? Because look how steadily, here's a little gray dashed line. Look how that resistance was hit exactly. What I've done, if there is, based on this particular candle, if there is a close tomorrow above 17,120, that's very good action, and that should have yet one more day at least to the upside, and that will start to challenge that red line right there, which is somewhere around 17,190. so about 70 points from the high of today, and 83 points from where the close was. If there is a close below, we've got to be really careful because the stochastic is under 80%. I love to see with this technical tool the stochastic be above 80%. That's really good. And the MACD, the moving average convergence divergence, is barely positive, and it says that the upside could be a little bit limited here. So what we're looking at is that this longer-term up channel is going to be challenged on the upside, but not very far from where we are, maybe 100 to 150 points, and then you've got to be real careful. But this is the thing that we've got to watch out for. This doji candle, meaning that a close tomorrow, a negative close tomorrow, especially pushing below the low, going to the 16,900s, starts to test this maroon line, which has been beautiful support and resistance for a long time. And if it becomes resistance again, it means that the price of the Dow is below 16,980. So enough with that. Let's get on. We're going to go the S&P. I'll do this with the charts as we do them. SPX.X. The S&P has already made its peak D. Remember in the Chapman wave we look for Ds? It's already made the peak D at 1985.59. Pull back to 1952.86, and the last 3 days actually, has climbed above the 9-period moving average, but really struggled today, closing down 3.82 at 1973.28. Here again, a close below today's low of 1965 is a negative, and says you've got that pattern that I call the H, the lowercase h pattern, from that 1985 high back on the 3rd of July, coming straight down to the 1952 low. We've got to be careful, and I'll draw it in here because I like to anticipate these patterns and talk about fighting patterns. You see there's an uptrend line right there. Right here, let me draw it in. Just two points of contact and you get yourself a trend line. And it says that tomorrow, if there's a close underneath 1968.60, let's call it 1968, that's just 5 points lower. It says be careful because you could retest the low of today. The weekly chart in the Dow and the Dow weekly and monthly charts and the S&P weekly and monthly charts are still very, very strong. Now, I'm going to jump just for 1 second because this is a very important INTC. There's a beat, Intel beat. It went for 52 was the anticipated price. It came in at 55, and right now it's trading up $1.39. So this is going to impact some of the indices if it can be maintained into tomorrow morning. And what's really important about this, remember we were speaking about the Ds in the Chapman wave. Let me just take a moment here and show you something. The CD, my CD introducing the Chapman wave methodology, only available, it's a CD book available at TFNN, explains this in great detail. But before we do that, I'm going to show you, this is a cartoon from that CD. This is something I drew a long time ago. And it says the two guys, one guy says, the stock market is like a finely tuned orchestra. All these sections rotating. Then together they build to a huge final crescendo. And the other guy looks at him and says, and as usual, I'm buying when the bass drum hits the last climactic chord. Well, that's kind of how you feel when you're buying at all-time highs. That's exactly how you feel. Now, let's look at this. The transportation index is going to be important, but I just want to show you, here is the, from the CD, this is slide 58 out of 476 slides. Here's that peak D. And it shows you together with the MACD and the slow stochastic exactly how we put these things together. So let me show you what we've got. Intel is in leg D, pushing above today's high. Let me just expand the daily chart. And look at that black line. That is the 9-period exponential moving average. There's a huge gap from 2810 back on the 12th of June to the next session of the 13th. That was a long weekend. Of 29.56 is the low. That huge gap at some point will be filled in. But at this particular point, it's almost as if it's a trampoline, a silent cushion, because the price keeps going higher. And that black line, the 9-period exponential moving average, is just beautiful, beautiful support. So the moment we see Intel start to trade underneath 30.3 under 31 in the 30s, it means it's using the 9-period moving average as a resistance. At this point, it's very positive. It's going to 32.73. I'll show you something really fascinating about Intel. Intel INTC in the weekly chart has gone to a leg D, but that leg D has been going on since the low of, in the weekly chart, the 23rd of May at 25.75, and it's had every single week since then, it's had a higher high bar to extend. I call this a floating ladder. So that D's still a leg D, a leg D, leg D. Even now, this week, it's leg D. You have to wait till next week before you can even make a peak. Look at the MACD, how strong it is. Look at the stochastic. So here we are. The comp index was down 24 at 44.16. Gold, the GLD was down at $1.20. And we're going to come back and talk about bonds and other things. And CSX in the way.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Sitting here for Tom O'Brien. I'm the host of the Tiger Technicians Hour every day, 11 o'clock till noon Eastern Time. And my service here is the opening call, a very comprehensive daily report on the markets and different trends and stocks that we own or indexes, etc. So let me just run the numbers now. The Dow was up 5 at 17,060. The S&P was down 3.8 at 1973. The comp index was down 24 at 44.16. And what's important here is that gold, which took quite a hit the other day, was down again today. The GLD was down $1.20 at 124 and 52.52. You've got gold itself down 12 at 12.94. Silver was down 18 at 20.75. High-grade copper stuck in the 3.26 area. So far, that's acting pretty well. It has had a very good rally, and now it's just having what I call a high-level consolidation. And you've got the dollar. Let's see, the dollar was up 21 cents at 80.40, and bonds were down 4/32 at 136 and 25/32. We're going to take our first call. We've got Ari in Arcadia. Ari, how are you?
By the way, I'm not by my charts at this time.
Okay. So, Ari, you want to do look at?
SLW, Silver Wheaton. Remember we tightened our trailing stop on it?
Very good. So Ari called in just the other day to my show. We were looking at the SLW, Silver Wheaton. It's now at 25.57, down $1. Down 101, down 3.8% today. And what we were looking at, you remember, folks, I was just talking, for those of you who are perhaps not looking at Tiger TV, but you can hear it, there's a moving average. It's called the 9-period exponential moving average, this black line that I'm showing for our viewers. And look how beautifully when Silver Wheaton broke out above that level and closed above it on the 5th of June at 21.13, from that moment on, it never looked back. It never even touched that line until just a few days ago. We were looking at it, and I said, in my work in the Chapman Wave, this particular chart pattern with the MACD, the fast-moving average, is a particular technique that I like to teach when I teach my Master Trader Series, which says that this price movement invariably doesn't have what we call an instant restart after peak D. Instead, it goes to an F, maybe even a G. But when it turns down very sharply. To be careful at that point and to have a trading stop. And what happens, it keeps climbing, and if you count each successively higher peak, it finally went on the 10th of July to 27.66. The next day, that leg F was called peak F because the high was only 27.33, and then yesterday it sat right on that 9-period moving average. But there's a little thin red line that you can see if you're looking at Tiger TV, look at this. I'm going to expand it and you'll see it. There's a it's a faster moving average, and what happened was it was signaling that the next pullback you had to be real careful, because together with the MACD, if it crossed negative and there was a failure in the slow stochastic to confirm that rally, that's exactly what happened on the 10th. You've got to be careful because the downside could be quite sharp. And lo and behold, today it was down very sharp. It was as ugly as the candle of that leg F that went to the recent high and that closed at its low. You just had almost like a 1-to-1. Now, it's fascinating. Do you have anything left that you're holding, Ari?
I went short today.
Okay, so that's good. So what we're looking at, there's another pattern. You remember the pattern that I was just talking about in the arch formation that I was talking about, folks, earlier on? Well, here it is, a soft W formation, like a cup formation. And in the Dow, we were also looking at that cup formation. And here it is, that strong resistance line that I had drawn in. And above it, I'd already drawn that lowercase h, it looks like a little arch formation. And this is the right here from the low that was made at 17.75 on the 28th of June to the low that was made on the, that wasn't June, that was, June of last year. This is a weekly chart to the low that was made in December, the week of the 6th of December on the 13th. That's like an H pattern, but then you invert it and it becomes a soft double. So now what you're looking at, and we had spoken about this, that there was a chance that it might not get to the 29s, but in fact it could use this as a reversal area and it could start on its way down. And in the weekly chart, 2474 is going to be absolutely critical. So I have to congratulate you on a fabulous trade, using your technique to be able to get in, and not only getting out, being able to switch positions. And the monthly chart, now this is going to be the same with gold. You know how I've looked at the gold chart? I'll do it now. This looks very much like the monthly chart of silver wheaten, like the gold chart. And here it is, the gold chart. You see there, those M patterns that are forming. So I'm looking at this and saying, okay, if on the weekly chart, gold, the GLD starts to take out 122. It's at 124.53. That'll be very negative. And SLV, which is not silver wheaten, it is the silver iShares, that's had a much better move, but had a huge gap down from a peak E in the Chapman wave, made a little extension from D and went just one quick move higher. Now it's given that all back. And I'm looking at silver as possibly the big test will be, it closed at 1987. 1970 this Friday at 4 o'clock. If it is substantially under that, that's a big negative. Silver itself, SLV, needs to climb very quickly within 3 to 5 sessions above 20.64. I just don't think it's going to happen right now. So I hope that helps you in a sense of perhaps what you're looking at in stages, Ari.
Well, of course I'm in at the 120-minute scale now. And what I'm wondering is, do I get on my shorts at the D on the 120, or do I try to move it into a daily type trade? But right now I'm on 120 minutes trade.
I would now, if tomorrow morning, if silver's a little bit weak and silver wheaten takes out today's low of 25.52, my 120-minute chart, let me expand it so people can see what it looks like. Folks, there's the up channel. There's that inside track resistance that I was talking about, and now it's broken the support level, and looks like it's got a 1-to-1 to the downside. It's very close to some kind of a bounce, but 26.14 is the 9-period moving average, and somewhere around 26.33 is a longer-term moving average, and I would say that's the area that if it does bounce, it should bounce there and then try to come back down and do a retest. So you might want to take a little bit off. If it gaps down tomorrow, take a little bit off, and that you can put back on any rebound over the next 3 to 5 sessions that gets you anywhere close to the 25.90, 26.14 area.
I appreciate that.
Thank you very much, and congratulations on a fabulous position play. So, for folks, let's just go through this because Intel is going to affect the SMHs. And the SMHs are what? That's the semiconductor index, trading right now at 51, up 52 cents. Now, let me show you something. I was going to show you this on Intel, but let's use the Market Vectors Semiconductor ETF. This is the monthly chart with the Chapman wave notation. This is now a leg, a semiconductor ETF, F/B. I don't have to make any decisions whether it's an F, which says be real careful, or whether it's a B, which says, wow, any pullback should be bought. In the meantime, because it's a very long-term chart and the MACD and stochastic are still very strong, I'm just going to squash this a little bit to show you how long it's taken Intel from 2001, from 2000, I think that was September. Yeah, June of 2000, Intel was trading at 100.20, went down to 12.95, and now it's rallying. I'll be right back. As I've been sitting in for Tom O'Brien, Dow is up 5, S&P down 3.5.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. This is Basil Chapman sitting in for Tom O'Brien. My pleasure to be here. And normally I'm my 11 o'clock till 12. The slot is the Tiger Technicians Hour, and it's the same number, 877-927-6648. Let's look at the SMHs. They made a high back in 2000, and that was in June of 2000. That was just a couple of months after the NASDAQ and the SOX index itself made the highs. So 100.20, and it goes down to 12.95 using a technique that I developed, which is where I try to find the plumb line, a midpoint, going all the way back, in this case, to 2001. There's a left side, right side price time match, which comes in, actually it comes in within 2 months. And that said that the price that I was looking at as a potential high, although we didn't have a trade on it, but this is just on a technical basis, was a 51.30 level. Right at this moment, it's trading at 51 after hours. The high today was 50.80, but that's because of Intel. Now, Intel had made a high, INTC, way back in, let me just double check. That was back in September of 2000, and that was at 75.83. Well, it had a little bit of a decline. It went down to, was it 11 or 12, 12.06, 12.07. So it went down to the 12s back in 2008, 2009, and now it is at 30, and now it's trading at 31. 71 as a close. Comes the news after hours, and the market so far is receiving this very positive. To me, it's more important how the market perceives the number than either the number or what you're thinking. And right now, the market is saying, we like that number. The number's good. And that is going to help the SMHs tomorrow, and it's going to help, it should help the S&P, except we have to also say tomorrow at 9:30 is the test. It isn't overnight. It isn't after the bell today. It's how does the market actually trade this? But in the meantime, what I'm looking at is technically the slow stochastic is at 88%. That's good. But the MACD, the moving average, was starting to fail. So if the moving average is still to cross positively, that says there could still be quite a bit more. So the close on Friday will both impact the weekly chart and the monthly chart, and we're looking at this to say that if there's a close on any single day between now and Friday below 30.70, about $1 lower than the close today, let's call it, just to be a little bit safe and say, if there's a close below 30.50, you got to be somewhat careful because something else is going on, and it says that 29.92 is the 9-period moving average that Intel might have to test. And then we're going to be watching the monthly this is parabolic in the monthly chart. So we're going to be watching Intel real closely. So IYT is the iShares of the, it's called the iShares Dow Jones Transportation Average Index Fund. A very long name. It's gone vertical, and it's in leg E. MACD is still good in the monthly charts. The stochastic is good. This on-balance volume is going to be the clue for us if it starts to turn down at any stage. But right now, the weekly chart says it's bumping into strong resistance. The IYT needs to clear 151.50. It's at 149.48. So it needs about 2 points more on the upside, because if at any point in the next week, I'm giving you a full week from tomorrow, Wednesday, if by next week, for whatever reason, it's closing under 146, that's starting to test the 9-period moving average, and then if it closes below that, it's going to be a negative, and that can only happen if the daily chart starts to reverse very soon. Up right now, it's trading at 149.48. That was the close, up 54 cents. So CSX is not really impacting it much. So we're going to go to our next caller. We've got Rob in Paramus, New Jersey. Rob, how are you?
Hey, Basil, how are you doing today?
Very well, thank you.
I was wondering if you could look at Netflix for a possible short.
Okay, folks.
What you think about it?
Okay, NFLX is the symbol, trading at 449.09, down 3.49. In the Chapman wave, it looks very much like a head and shoulders pattern. Here's the head on the 18th of I believe that's June. Yeah, 18th of June at 450.82. It pulls back, holds the 9-period moving average, gaps up on, I can't remember, there was news that forced it to rocket to the top, probably also short covering. It goes to 475.87. I call that a peak F, and we put a little cap on it, a little inverted, there it is, a little inverted V to say, yes, it did give a sell signal. This is like a coda, an extension to that particular rally. And then what does it do? It breaks down under support, rallies yesterday, back to the 455 area, 55.48. Today, not such a great candle, not a bad candle, but not a great candle. This is telling me that there is okay, let me give you the parameters that I'm looking for. I'm going to grab the 120-minute chart. That's the one that I think we were discussing it. At least I showed it the other day, that it made a peak C1 and a peak C2. That's where it just misses going to the D. The technical verifications for that in the 120-minute chart. You see the stochastic failed. The MACD was turning down. And what does it do? It goes to this golden, this orange line right there, the 200-period exponential moving average. And it uses that as support, and it goes peak A. Let me put that in. That's an A. And I call it a gray A because it's underneath the previous major high. So it's a retracement pattern. Now it's okay. So these are the parameters I'm looking for. I would give it 2 hours tomorrow morning. If Netflix is not above this candle's high, 450.70. So that's, I'm going to say 2 points. If Netflix is not 2 points higher by 11 to 11:30 tomorrow morning while I'm doing my show, I will say to you, yes, I think you can short. Would you be using puts, or would you actually short?
Puts.
Okay. If you're going to use puts, I would scale in, and I'd only start it, and here's the reason why. There's rotational internal strength in this market. In a little while, or maybe in the next hour, I'll look a little deeper into the XLF because JP Morgan and Goldman Sachs came out with earnings. The XLF is okay today. It wasn't great. It should have been up much more. So if there's general weakness in the market tomorrow, and Netflix is participating in that weakness, then what I would do is I would only start scaling to the short side if it takes out the 450.20 low bar that was made at 1:30 this afternoon. But certainly if it takes out 442.13, any put positions that you have, I would take at least one part of your put position. I'd have a trading stop on that, because your objective here is the 435 200-period exponential moving average, and you want to see an H pattern, yet another lowercase arch or H pattern, and that's what you want to see. The reason why I said give it an hour or two, unless the general market's weak immediately and Netflix is immediately down 50 cents to a point, then you can start your position right away. But I want to see what the first 2 hours, hour and a half to 2 hours holds, because if Netflix starts to weaken, it's going to be participating very much like a number of the NASDAQ stocks, and especially in the IBB, the big momentum stocks that have massive pullbacks in April, 20, 30, 40% in some cases, have had a spectacular run. I think this run was a false run to the upside. So my bias right now is, just in certain cases, is to be looking more to the short side. In the monthly chart, there is still nothing wrong with the price at all-time highs. That's the full month of July, having made 475.87, because this is leg F as I see it. And that the implication here for Netflix, I have no way of counting this. It's got the weirdest count. In the Chapman Wave methodology, this is really unusual. I could theoretically say this is A, B, C, and in fact this is D/B right now. In fact, I'm going to do that. Finally, I can give a decent count that is legitimate in the Chapman Wave. Otherwise, I was just stuck saying, I've never seen a stock not give me any reading at all that I can feel is correct. Now I feel it's good. The stochastic is good in the weekly chart. The MACD is pretty good, not great, but good. So the price is really what's getting. Talk about the 120-minute chart as being the rudder to steer the daily, and the daily is the rudder to steer the weekly. And on the weekly, nothing's going to happen negative until it really closes strongly below 430. If it does, or when it does, Netflix is going to be in for a deeper and longer correction because that's going to impact the monthly. As it stands right now, the reason why I said don't get too carried away, just kind of start a position and you can add to it on weakness, is because the weekly and monthly charts are still saying be a little bit careful. This is really only in a trading range between the 470s and the I'd say on a bigger basis between 430 and 420. But when that starts to go, weekly and monthly charts will be impacted for sure. So I hope that helps you. It says...
One other question.
Yes.
The earnings are coming out Monday. Does that affect anything?
Oh, earnings on Monday. Yes, it will. Okay. Hold on, and we'll talk about it when we get back.
Okay.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Hi everyone, Basil Chapman. We're back. As I said, the Dow's up 5 at 17,060. It made an all-time high today. S&P was down a little bit at 1973. And we are on with Rob in Paramus, New Jersey. And he had a great question about Netflix. The earnings are coming out Monday. And the question was, well, first of all, the question and the implication is if one was going to be in put position, the shortish position, what are the chances when earnings come out that it'll drop or whether it'll spike higher? So, Rob, this is the answer to the question. Over the last couple of years, I've found that trying to predict the outcome of earnings is really very difficult because what happens immediately afterwards and then overnight, if it's after the bell, and then into the morning, you could see anything happen. And we've seen with Apple and many stocks that there's an immediate 20-point decline and then a 20-point rally and then a whole mishmash and then finally the next day, whatever the direction will be. So I'm going to suggest that I would be looking at this purely as it's somewhat overbought. If you don't want any risk, then think of it more as a short-term trade, and you can trade it into Friday. Otherwise, you really have no choice but to wait it out, let it move in the direction that it's going to go, and then on Tuesday or Wednesday, you can treat it as a brand new trade. If it's trading about 475.87, that's broken out. It's actually leg C. E/C in the weekly chart, it's going to look really positive. And if it turns down and goes under 425, that's going to say, uh-oh, the decline has begun. The consolidation that it needs has begun. So I'm just going to suggest to you that if that is your concern, I would hold off. Yes, you could make a bundle. Yes, you could lose a bundle. So I don't need, you don't need that kind of risk. Unless you take one position and you just say, that's the one, I'm prepared to lose my $9 or whatever it is, but there could be a huge move one of the ways. So,
okay. It's safer just to wait till next Tuesday.
I'm sorry, what?
It's just safer to wait till next Tuesday.
I think so. Mr. Will in the dance says put should be increasing in premium up to Friday before earnings. I'm kind of in agreement with him. There's going to be a little nervousness. So if you wanted a short-term trade, but I would probably say be out of it by earnings. If earnings are after the bell, even Monday, there could be a lot of whipsaw action. So my bigger outlook is those are the parameters that I've given you, and I would stick with those. And I just wait. If anyone's along this, then I'd say that going into a Monday, you could take a little bit off to give yourself a little comfort that you've taken profits, but don't just trade because of the earnings. Trade because of what happens with the result. Hope that helps you, Rob. Thank you very much for calling.
Thank you very much. Bye.
Bye-bye. So, folks, I want you to look at the XLF because there's a question, and I've been following the XLF very closely because there are a couple of things that are going on. Just on a very quick a pattern formation, I would love to go like this. I just grab that side. I'd go to that side. I'd expand a little bit. And what you see is it's like an oval pattern. And that oval pattern in the XLF trading at 22.99 up 16 cents says 2307 is key. You could break above it to the 23.18, 23.22 area, but unless you're going to turn the 22.95 area to 23 into support, so that the weekly chart can actually garner some strength to break away from the 9-period moving average. This 9-period moving average, while it's fabulous support, is starting to say, hey, you're getting closer and closer to 22.66 and below. So the candle that I'm looking at is last week's candle, and that candle had a low of a high of 23.01 and a low of 22.46. That's going to be really important in the next week. If there is a close below 22.46, let's call it a close on a weekly basis below 22.30, that's going to say, hey, it's the first time you've done that since back in May. And it's going to turn some of the technicals negative. And what I'm watching real closely in the XLF, the S&P Financial Spider Fund, is the way it's walked the 9-period moving average so beautifully in the monthly chart. And that has just, can you believe that it has such a tight support level of around about 22.02 to 21.91, and it hasn't broken under it. And the MACD is good, but starting to the histogram is starting to decline, but the stochastic's still at 92%. Folks, this is a very important period. In the next hour, when I come back, I'm going to go through some of the things to look for. Let me just do this before we sign off, and I'll do this right now. What I'm looking at here is the VIX index. The VIX index is trying to show that it's got a little bit of gumption here. It's got a little bit, see, this is that inversion of that oval pattern that we were looking at. There was the one break to the downside of 10.28. We'll see how Intel affects the SMHs, the semiconductor index, how the semiconductor index infiltrates into the S&P 500 tomorrow. It's going to be really, really important. Now, what I am looking at is if on Friday afternoon at 4 o'clock, the volatility index has either pushed towards the 1250 to 12, what was the high today? The high today was 1247. Pushed over 1250 intra-week, and then on Friday closes anywhere between 13 and 13.49. If it closes anywhere there, but especially if it closes above 13.49, that'll be the first weekly the first period in the weekly chart where we've seen successively higher peaks and higher troughs. That's going to be really important. And if that happens, then the Dow will slide, and this Dow will slide probably into the 16,700s very quickly. That's going to be key, that whole area of 16,700. And the S&P right now, SPX.X, has very strong resistance at the 1985 level to 1989. But if it takes out on the upside, then you're looking at the 1990s. That's going to be really important because people will start talking about 2000. I'm thinking the 1985 to 1990s area is going to be very strong, even if there is a strength in the S&P right at this moment. But here's the downside. Any move to the downside below 19, let me just give you this candle. Between 1963, 10 points from here, it's about 100 Dow points, says be careful, because if there's an arch formation test of 1952 and that gets taken out by Friday afternoon, you're looking for the very first time at the weekly chart starting to show some kind of dissipation in this tremendous strength that they've had. And all I'm going to say in terms of positions, if you have positions that are working for you nicely on the upside, that's great. If they're working on the downside, it means you're in the correct weak sector, weak stocks. So stay there. So that's the chap sitting in for Tom O'Brien. I'll be back in the next hour. For those of you leaving, have a great rest of the day and evening. I'll be back in a few minutes.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests. And
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Good day, Money Masters and Treasure Hunters. Welcome to the July 14th magnificent, magical Monday edition of the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he is away. I'm the morning anchor here at TFNN. I kick things off each day at 9 a.m. You can catch me on a radio station. If we're not on in your area, you can always tune in by going to tfnn.mobi. That's an easy way to do it. You can always watch our show live on Tiger TV. You can do that also on your mobile device by going to the homepage at TFNN.com. Upper right-hand side, you'll see a little button, 3 smartphone devices. Click on that. The show will stream live to you. So if you're wondering what the futures are doing in the market in the morning, where things are headed to, just tune into the show. I cover that during the first segment. Of course, if you're at work, just put a little earbud in your ear. Nobody will be the wiser out there. Of course, we stream live for 9 hours each and every day. So welcome to all of our new listeners out here. Or technical analyst. I utilize tactical tools such as the A to B equals CD patterns. That's a lightning bolt. I'll show you some of those patterns here this afternoon. We take a look at Fibonacci retracements and expansions. They happen to be little floors, measuring floors in the marketplace that are really good guidelines as to where price is going to travel to. We take a look at swing points. Swing points are nothing more than a major intersection. If you're driving at home this evening, you'll pass some major intersections. You'll pass some minor intersections. We look for where the big changes in trend take place. We use those as our anchor points to do our measurements of our Fibonacci expansions and retracements out there. And, of course, we always take a look at Japanese candlesticks. Those are the signs that the bulls and bears make for you and I each and every trading session. I also have a newsletter service called Mastering Probability. If you'd like to test drive that for free, you just click on my name on the homepage at TFNN.com, and then click on Mastering Probability. You can test drive that for 30 days. Unconditional money-back guarantee. This is a show, though. It's all about you. That means that you can give us a call at 877-927-6648. We'd love to field your call, answer your question, assist you however I can. Just feel free to give me a call. With the Dow finish up 111 points today. She closed out at 17,055. The S&P up 9.5 points. That closed at 1977. NASDAQ Composite closing up 2,500. That closed at 44.40. Russell 2000 up $5.68. Let's take a look at what's going on indice-wise. Let's start off by taking a look at the Dow. So we had the Dow today try and close above its most recent swing point high. Should have been able to do that. That was July 3rd. Markets moved higher July 3rd. That was a shortened trading session. It was light volume out there. In fact, if we take a look here, I mentioned during the first hour the volume inside the ETF or the Qs, which is a real bellwether as to what the market is doing out here. Light volume inside the Qs tend to make highs out there, sometimes also referred to as distribution. Now, the diamond started off with a bang this morning out here. Let's see if it was a bust. Then check in on the diamonds out here. What did the diamonds do? The swing point was July 3rd, 170.47. Price got over that, 170.61, closed at 170.29. Volume today, 2.8 million shares. Boy, it really was a bust. It was only 2 million shares on July 3rd out there, but volume was pretty heavy in the morning. That was between the 9:30 and 10:30 session out there, and then it just simply kind of dissipated. So you've got a test of a swing point with some volume, but you got to put that in perspective. I'm not doing the math out here, the algebra, but you could do it. We were only open from 9:30 till 1. So what is that, about 3.5 hours versus 6.5? Seems to me like it was a test on lighter volume and a rejection. Now, that alone does not make it a reversal out there. So that's what the Dow diamonds were doing. If we come back and we take a look at the Dow, if the Dow is able to get above the July 3rd area, then what it's doing is setting up an A to B equals CD to the upside. The A point on this is going to be your low from May 20th. Your B point out here, we're going to use a B point. We're going to use the high from June 9th and then a little retracement down into June 12th. That would say your 1-to-1 A to B equals CD inside the Dow would take it to 17,333. 32. Now, if I put the inside the Dow, I'm going to put the monthly chart up on my screen just to kind of give you a picture as to what's going on the longer-term basis. Let's do that. As we take a look at the Dow, we're taking a look at a 15-year consolidation that it was traveling within. That's a little sideways move. That consolidation taking you back into 1997. The 1997 area was cementing the lows. That was down in the 7,200 range. We saw a test of that area back in October of 2002. We saw another test of that area back in March of 2009. The top of the consolidation was cemented back in 2000. That was up at the 11,750 area. Price had broken above that back in November 2006. It made a price relative strength divergent pattern. That's where price moves higher. Does it on less relative strength. Gives you a reversal signal. That's what it did the month of November of 2007. Then when price got back inside the consolidation, as so often happens, price will go back and revisit the bottom because that is a signature of a false breakout. Then, coming off of the March 2009 lows, back in the trading session here of November 2011, price finally broke back above the consolidation, and it completed its move. The completed move projected price out in the 16,300 level. This is what's called a measured move out here. Price equals or it's equal to or greater than the measured move, greater than the consolidation. So that's what's going on inside the Dow. Its work to the upside, in essence, has been done. If we go take a look at the S&P 500, let's do that. The S&P 500 today closing up $9.50. The S&P closing at 1977.10. Now, the S&P failing to take out its swing point from July 3rd, so a little bit weaker than the Dow is. The S&P 500 has a 1-to-1 A to B equals CD, using the same swing point time frames, if you will. The April 11th area, that's your A point, that's the low. That's out at a price level of 18.14 and change. Your B point is a move up into the price level of May 13th. That's at 19.02. Little retracement down into the May 15th area. That is the lightning bolt. Your 1-to-1 A to B equals CD. That completed back here on the trading session of June 9th. It then made it to the next level. That's your 1.272 Fibonacci expansion. If, in fact, the S&P can close above the July 3rd high, that says that price ought to target the 2,000 area. That may be where everybody is coming up with the 2,000 price point. If we go take a look at what's going on from a longer-term basis inside of the S&P 500, oftentimes we focus on the shorter term. I want to give you really the longer term as far as and as well as the daily as far as where we're at. If you take a look at the longer term, unlike the Dow, which has completed its measured move of its consolidation, we take a look at the S&P 500, it has not. It's been in a 16-year consolidation. That taking us back into the time frame here of 1996, December of 1996. You can see it consolidated in between the levels of about 793 up to the highs in 2000, right around the 1552 level. We saw price just simply travel within here and finally break out of that consolidation back in April. That's April of 2013. Its measured move would take you up 800 points above the breakout. Well, if the breakout is right around the area of 1576, that says you've got a measured move up to about the 2350 area. You are at 1977. This is a longer-term horizon as to where the S&P is likely to head to. If we go take a look at the composite, let's go take a look at the NASDAQ composite. This closed up a total of 25 points today, closing out at 4440. Now, the composite here was unable to take out its high. If we take a look at retracements here, its most recent retracement, what we will see is the high back here on the trading session of July 3rd, down to the low back here on July 10th. What we will see is that what the composite was able to do today is get up to about the 0.786 retracement level. That's using our swing points as our rulers to understand where price is traveling to. That level, by the way, 44.57. Today's high, 44.51. So it has made a 0.786 retracement, oftentimes an area of where price will move back to. What the composite has to do is move above the level of 44.85 in order for it to continue higher. But if we take a look at the monthly chart for the NASDAQ composite, what we're going to see is the NASDAQ composite has completed its measured move. This happens to be a 1,500-point consolidation that it had been traveling in ever since December of 2000. Finally broke out with some conviction, and that took place in November of 2012. It completed its measured move. Now, the bullish side inside the composite will be where's it going to close this month, because last month it closed inside its all-time swing point high. As you know, when you close inside a swing point, it says you can go test the high, volume or not. Well, inside the composite, that would be 51.32. But its measured move, its consolidation move, is complete out there, and therefore it does not need to move higher, but it most certainly can. We had the Dow finish up 111 points. When we get back, let's go take a look at Goldilocks. Let's take a look at gold. We'll take a look at the silver. And, of course, anything else that you'd like to. All you've got to do is give us a call at 877-927-6648. I know you get a little apprehensive making that telephone call, but I'll make it as comfortable as I can. Just give us a call. We'll take a look at your equity when we get back from this break. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom? Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the day. And as we do each Monday at 20 past the hour, we've got our Investors Business Daily Update, presented by none other than Amy Smith out there. For those of you not familiar with Amy, she's a market commentator and a host on the IBD Market Wrap. Now, you can hear that every Saturday afternoon on AM 870. Of course, that's in the California area. And the show is called How to Make Money in Stocks with IBD. Amy's also authored a fabulous book, How to Make Money in Stocks, Success Stories out there. It's a must-read, in my opinion. Make sure you add that to your library. Amy Smith, good Monday to you. How are you doing today?
Oh, hi, Steve. Well, I'm doing just great. I just returned from Boston, which is, of course, Tom's old stomping grounds, and it was just really, the weather was just perfect. The people were so nice, and these folks have had a rough winter. So the fact that the weather's so beautiful, all the sailboats were out. People were jogging all over the place. The Boston Common was full of people. Yeah, it was great.
And I understand that for breakfast you were eating out at Regina's.
You know, it's funny. Tom sent me there. Let me tell you what happened. He said, you've got to go. You've got to get the pizza. It's the best in Boston. So after my talk in the morning, the level 1 on Saturday,
yes.
I went up to the room. I got changed. So it was about 3 o'clock. So it was an off time. I thought it was done with the lunch crowd. I took a taxi there, and you know what? The line was down the block. I couldn't wait that long. So I had to not eat, unfortunately, there.
You got to just tell him that you know Tom O'Brien. That's the whole key to getting in.
He didn't give me that message.
Oh, he did. Actually, it's not so much the pizza. The pizza's great, but it's this stuff that they put on the pizza. I forget what they call it. So if you had gone there and only had the pizza without the gunk, of course that's not what they call it. That's not a real good appetizing name, but it is something like that. When Tom and I were up there, he took me there in the wintertime, and we had to stand outside. So I know what you're talking about as far as the line.
Oh my goodness.
We had to stand outside, and I'm a Florida boy, so I don't do that well in the cold these days. But we did it nonetheless, and it was great pizza for sure. So,
well, was it the sauce or the sauce they put on it? What made it so unusual?
Yeah, really, it's the sauce. Nice kind of thin crust pizza.
Okay.
And there's a special name that they have for that sauce. Maybe somebody in the den knows. I apologize for not remembering. But it's, every city, especially a city like Boston, has got a lot of great ethnic food. I'm originally from Detroit, so I would have taken you to probably Greektown or something like that.
Oh.
They've got some garlic dip called tzatziki out there. And when I say garlic dip, you taste it for the next 24 hours, but it's great going down, that's for sure.
Well, I'm going to be in Detroit. Not until November, so I'll have to try that. You say that it's one of the Greek places.
Yeah, well, I'll get your stomach. Do you have a cast iron stomach?
Yeah.
Oh, good. Okay, then I'll send you a whole list of places to go to.
Okay.
Now, how about the market? What's your take? What's IBD's take on the current market conditions out here?
Well, of course, today we had the upbeat earnings from Citibank, and we had merger and acquisition activity.
Yeah.
We also got a boost today. Goldman Sachs analyst raised his target for the S&P because, he pointed out the fact that the 10-year Treasury note was around 3%, and it's going to continue to push investors into stocks as we look for higher returns. Now, having said that, we had a little bit less. We ran into some trouble Monday and Tuesday last week. And so the IBD outlook was changed to market under pressure. Then we got a boost from the Fed on Wednesday. Even though they expect to end quantitative easing, that's kind of been baked into the market, so that wasn't a surprise to anybody.
Right.
We had Alcoa that kicked off. Who expected that? 157% increase in earnings. And, of course, the aluminum's been used in cars and in cell phones because it's lighter. It's a lot lighter than some other metals.
Yes.
So that was interesting. Of course, we are right. We're right in the thick of earnings, and I think that, honestly, Steve, we're going to see, when we see later this month, around the 21st to 23rd, we've got Facebook, Chipotle, Netflix, and Under Armour, and they're all setting up. They all look good, and I would say if we're going to really take off here, we need some more good earnings numbers.
Yeah, and anyone specific that looks the best to you? You know, you mentioned Chipotle. How's that? Looks like that's trying to break out and get above its highs, its weekly highs back from March of 2014 out there.
To be honest, you never know how these stocks are going to do as they go into earnings. But Facebook, Netflix, Under Armour, they're all setting up. They all look pretty good. Even Tesla, to be honest with you, setting up on a cup with handles. So it's all going to depend on those numbers. Do they satisfy what Wall Street is expecting that they'll do, and how is their forward-looking guidance?
Right. And last week we had lumber liquidators, so that had tanked. They did lower than expected earnings, and what's your take there?
That was kind of the stock had been on the weak side even before they reported those earnings numbers. It was not looking technically very good. Mm-hmm. But really what hit them the hardest, not only did they say they disappointed and they went from earnings up 48% down to negative 14%, and they said the first-time buyer is having a very difficult time getting into a home. So we have a lack of first-time buyers. The houses have gotten so expensive in many parts of the United States that first-time buyers like my daughter, or they can't afford those the houses that are on the market that are startup houses. And if we don't have new buyers going in, then they're not going to remodel the homes, and then that's going to affect a company like Lumber Liquidators that makes this beautiful hardwood flooring.
Yeah, and what's the housing market like in your area? Does your daughter live in
LA? Unfortunately, it's fairly strong, and it's fairly strong. It's fairly pricey. We're seeing really. I see a sign go up, and I see a house sold fairly quickly.
Mm-hmm.
It's the housing market, but I think that the more difficult the market is the startup market. The starter market, we're not getting enough new people into that. The real starter homes.
Yeah, what a great opportunity with interest rates being so low.
Right.
A lot different than when I purchased my first home out there. So what, it is Lumber Liquidators, so that had some trouble out there as we were talking about. There are some stocks that are setting up if the market really begins to take off. Or I guess you really mentioned that Chipotle and Facebook out there. Anything else that...
Alaska Air is looking pretty good. The biotech stocks, in terms of the drugs and the pharmaceuticals, my goodness, I could give you a whole list of those. Biogen has treatments for multiple sclerosis. That one's setting up. Believe it or not, and this is crazy, Steve, Monster Beverage. I would have thought with, how many different energy drinks do we have on the market right now? I mean, there seems to be a whole ton of them, and yet Monster Beverage is kind of setting up. We'll have to see if it really takes off. But those are just a few that are setting up. We still have this week is the real test for the banks. We have Goldman Sachs, we have J.P. Morgan. Today we have Citigroup. Wednesday we have Bank of America. So we have to see how the health of the financial markets go. Citigroup kind of surprised everybody today with some really good numbers.
They did. Well, I'm not much of a Monster Energy drinker. But I did, back in the 2006 time frame, I was able to catch that move off of the lows. I did that by watching all kinds of Monster Energy drinks being wheeled out of a Costco store.
Yes, I know. That's just crazy. Yeah.
Amy, always great to speak to you. Have a great Monday, a great week, and I look forward to speaking to you again soon.
Thank you so much. You too. Take care.
You bet. That was Amy Smith at IBD. This is Steve Rhodes, TFNN. We'll be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filled in for Tom for the evening. And we're going to go out to Martha's Vineyard. We're going to go take a look at golden minerals with our man, Steve. Steve, thanks for calling. Thanks for holding. How you doing today?
Here on Martha's Vineyard.
Yeah, what's it like out there?
Well, today was a little bit cloudy, but we've mostly had a very nice sunny weather, a lot of sailboats. I've been out in my sea kayak doing a little fishing. You know, I've got one of those fishing kayaks, so I like to go out and commune with nature.
Oh, that sounds good. And sounds to me like maybe there's some lobster in your future?
There have been lobsters. in my future pretty recently.
That's great. Now, do you live up there, or do you spend the summers up in Martha's Vineyard?
I spend most of the summer here, and I go back and forth when I'm not working around Boston.
Yeah, wow, that's great. You wanted to take a look at ticker symbol is AMUN. Company's name is
AUMN. Yep.
AUMN. Golden Minerals. They are a exploration mining company. I believe they do that in Mexico. So tell me what you're doing, your time frame horizon that you're taking a look at. If you're in the trade, what your parameters were before you got in the trade, and I'll do what I can to assist you.
Okay. Well, I looked at the stock when it was in kind of a bullish little wedge thing when it was down around 50 cents, and it kind of popped out of my wedge before I made the decision to get into it. So it went up pretty high. It went up 150%. So then I went to a weekly chart, and I was looking at a weekly chart, and I'd read a book called from Weinstein on Weinstein base patterns.
Okay.
And this looked like it had a Weinstein base pattern on the weekly chart. So then I started doing a little research on it, and I saw they mothballed their mine, and they were just going to open it again in July, and that news popped it. So I waited for a retracement, and I bought it at $1.
Okay.
And I put a good chunk of money in it because my projection was that, I'm not sure exactly when, but I could see it, given that it was the $28 stock, going back up to $3, $3.50, and that's big money if it does what I think it's going to do.
Yeah, if I take a look at the weekly stock chart on here, the first area, let's assume, I don't want to assume anything. Let's say that it does move higher as you expect. The area that I would be targeting, because you've got a longer-term objective outcome on this, is September of 2012, Steve, and there's a high-volume high that hasn't been tested. And as price moved off of that, now that's at a level of traded up as high as 722. The low there is 560. So that's where I would be kind of targeting if, in fact, it does move the way that you're looking. I never like hearing that somebody's backed up the truck on a $1 stock out there.
Yeah, I know. I don't do it very often. I just I've had luck with this strategy a few times in the past.
Okay. The breakout session, if this does pull back, so I don't know where your stop is or whether you'd consider adding to the position, where this broke out from, as you know, June 17th, and that's really where it could pull back to, which is the 67 cent area, and it would be natural. I don't know if this equity here will pull back as the gold continues lower out there, the metals continue lower, but that's the spot to really look at coming in on this equity. Now, as a suggestion, and we're going to be going out in just a moment to our folks out at TD Ameritrade that do the options hour for us. One thing you could always consider on a stock that's a buck or less is using what I call an unexpired option. And that's taking some percentage of your capital, 1%, 5%, something like that, whatever that might be, and then buying that number of shares and then sticking that in your drawer. Versus, and that way your stop is basically zero out there, and you've kind of minimized your risk because you always want to make sure that you've got capital in this game out here, and anything that's under $1 is always a little bit risky. So that's my suggestion to consider. And of course, you can always do that because you're still in a profit position out here. So does that assist you at all with what? I just. Some years ago I saw that LNG stock when it was $1, and I did a little research like this one, and I thought I saw something similar, and the damn thing, went up to $60 now. But I sold it around 20, but still 20-1 on your money is. It's a good thing. It's a good thing.
Yeah. This one kind of feels that way to me. I know
Well, I wish you the best. I wish you the best, and sounds like you'll be eating a little lobster, so enjoy your summer up at Martha's Vineyard. Thanks for holding. We appreciate it very much, and just be careful.
Thanks very much, Steve.
You bet.
And I know you were going to cover gold and silver a little bit, so
I will. We will.
All right.
Thanks so much for calling. Folks, as we do about this time each Monday, we spend time with our folks out at TD Ameritrade, and it's called the Options Hour. It's a great program that's hosted here at TFNN.com. Tomorrow, we've got our host, Chad Coco, who's on the line with us. Chad, how you doing today?
Pretty good. Thanks for having me.
Oh, our pleasure. So tell us what you're looking at. What type of things are you going to cover tomorrow during the show? And, folks, that's from 12 to 1 here at TFNN.com.
Well, I think so. The past couple of weeks we've been doing these shows, we've got into a little bit more complicated type strategies. I think I'm going to bring it back down to the basics, go over some of the basics with options trading, maybe get into some entry-level option spreads, and then see where we can go from there.
Yeah, now, great time for folks to be taking a look at options. The insurance cost here with the VIX index, being at about $11.82. I would think you've got some pretty decent material to work with.
We definitely do. Yeah. So the VIX dropped about 2% today overall. We saw about a % move up at the end of the day today, which is kind of nice for those trying to sell some premium.
Yeah. Now, is there anything specific, any equities, any specific trade on anything that that you've seen that looks of promise for our listeners?
From this morning, I was looking at a couple. This morning, I was looking at some bullish positions in Amazon and Visa specifically.
Okay.
We'll see if we can carry those over tomorrow, see what kind of movement we have with the SPOOs and the pre-market to see if that gives us any indication what's going to happen with the rest of the day.
Yeah. Now, when I take a look at Visa, I looked at this equity this morning, and so now that I pull it back up, it looked like it was taking out a swing point from the trading session of May 30th. That had 1.5 million shares, and today was able to move higher with twice the volume, so about 3 million shares out there. It looks like this wants to run to the 224, maybe 229 level. Was there a target area that you're looking at specifically in Visa?
About 225 is my target on Visa at the moment.
Yeah. No, I think it looks to me like that is where looks to me like it wants to head to that 229 level. So I think 225. So I think folks ought to listen. I think I'm going to listen in to you tomorrow.
Take a listen and take some time out of your day and see what we have going on.
Absolutely. Now, did you also mention Amazon was another equity that you're looking at?
That was another one. I haven't looked at it later in the day, but this morning I was taking a look at that. It looked like we had some good movement in the morning for another big bullish move, which appeared it did throughout the day. It looks right at the aftermarket. There was a little bit of a sell-off on that, but I still feel pretty good on that one as well.
Yeah, now I know that this took off on Friday. This had some big volume behind the move. Gapped up, had about 8.3 million shares. That says that Amazon wants to actually trade up to 379, maybe 395. Do you have a target in mind when you're taking a look at?
Again, I'm being a little bit more cautious. I'm looking about 375, 376 in that one.
Hey, that's I take 375 when I'm throwing out 379. And
right.
Now I guess the move behind that on Friday. I don't know if this is the case or not, but from a was their drones? They were going to become the Domino's Pizza of delivering goods, except for pizza, right?
There was some news on that. Yes, I'm not really sure if that really caused the movement, but there was definitely some news popped out on the market related to drones and delivering some of their products via drones.
Yeah, now a 30-minute delivery, I would think that would be pretty big. That could put some, if that ever did come to fruition, that could put some hurt on stocks like UPS, FedEx, I would think.
I would think so, as well as I also think retail stores. If I can get a product delivered to me that it would take me 20 minutes to go to a Best Buy store and wait in line, if I can have it delivered to my house in 30 minutes, something I might be considering about.
Yeah, no. Hey, I think maybe they'll maybe they'll go ahead and start delivering pizzas. Whether it be, they can do the 30 minutes or less. That opens up a whole new avenue.
Sure does.
That they're not in. Well, look, folks, if you haven't had a chance to listen into the Options Hour, it is a fabulous show. We just took a look with Chad at, he gave you a couple equities that he's going to cover tomorrow. I can tell you both those equities have confirmed A to B equals C, the up pattern. So I would suggest that you listen in. That's 12 noon here at TFNN. Chad, as always, thanks so much for all the work that you do here for TFNN, and have a great evening.
Oh, glad to be a part of it. You as well.
Thanks so much. That was Chad Coco. Tune in tomorrow, folks, at 12 noon for the Options Hour. And so he's going to cover those two equities. We had the Dow finish up 111 points, the S&P up about 10. We get back. Let's go take a look at gold. We'll take a look at silver. We'll take a look at the metals, see what they're doing, what to be careful of. We'll be right back, folks.
Andy Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. Thanks so much for joining us this evening. And don't forget, I kick things off for TFNN each morning. I also have a newsletter service called Mastering Probability. You can check that out. If you go to the homepage of TFNN.com, you'll see my name under the radio show host. Click on that. That'll take you to a landing page, and you'll see Mastering Probability. Click on that once more, and you can test drive Mastering Probabilities next 30 days, unconditional money-back guarantee. In the aftermarket out here, we've got Valero. VLO is the ticker symbol. It's off about 3% this evening. It is down about $1.53. It closed out at $49.93. Last trade fired up at $48.40. Folks, if we take a look at the A to B equals CD pattern on this equity here, and this is the daily chart that we're taking a look at. This is exactly how you want an ABC if you're short. This is how you want to see an AB equals CD to the downside, and that's this. Makes a high. This is on the trading session of May 6th. 59.69 is the high out there. Looks like a little shooting star candle as well at the high. That's the opposite of the hammer candle. Makes a move down into a little doji candle. That is on June the 11th. Gets down to a price point of 52.75. Makes a 0.786 retracement. Almost perfectly. Does that on the trading session of June 24th out here. If you recall, we took a look at the composite, which has also made a 0.786 retracement. Not saying the two are the same, but we'll know soon enough. We'll know tomorrow. Now, in the case of Valero, gaps down, big volume. That is called wide price spread and accelerated volume off of a C point. Of course, it makes the 1-to-1 A to B equals CD. That's not the end of it. Then makes the 1-to-1.272. That is not the end of it. As I mentioned in the pre-market or the aftermarket here, trade at $48.40. Where's that going to take it? Well, if you take a look at the most recent swing point low, that's $48.31. That's July 9th. Tomorrow morning, it looks like that will be under pressure and says $46.90 is the next stop for Valero, VLO. And if I pull this back, this is a daily chart. I'm trying to find the next high volume bar out here. Boy, that high volume off of that high on the trading session of June 25th does not look good. If we just take a look at a natural retracement, we're going to look at a swing point out here, and that swing point takes us to October of 2009. We're going to go from that low. I'm going to try to go from that low. I'm going to grab it one more time. There we go, from that low to that A point, to that high that was put in on May the 7th. We'll see that very likely price is going to pull back to about the 43.43 area. That is on ticker symbol VLO. Let's take a look here at gold and silver. If we take a look at gold, the chart that I've got up on my screen here right now, this happens to be the 4-hour chart, so it's a 240-minute chart. Most important element for you to take in here is that gold, which came off the lows. This is back on June the 5th, came off nicely. It formed this little rising price channel. And what it did here today was it broke it with conviction. Coming into the time period here of about 8 o'clock this morning, it looked like maybe that was the area where price was going to hold. That's the bottom of the rising price channel. But no, it had a different idea, and it just went ahead and moved through it with volume on that time frame out here. What does that set up? Look, price has gotten into an oversold condition. The most bearish pattern when you get into an oversold condition is to work yourself sideways, is to work off price by moving sideways. In this case here, even if it doesn't do that and it bounces a little bit, if it can't get back inside the rising price channel, the house of the rising sun out there, well, what that does is that sets up another leg to the downside. I think that is a likely option. And I think that's a likely option because of what the commercial traders have been doing over the course of the last several weeks, ever since the low, quite frankly, that was put in back on June the 5th. Here's a weekly chart that I've got up on my screen. Now, I don't have this updated for the CFTC data. It came out on Friday, but I did peek at it. And when I peeked at it, and the computations I looked at, the net short position for the large commercial traders, considered to be the smart money out there. They take a while to go ahead and build their positions. They're big tankers, if you will. Well, they moved even higher on their net short. So as gold was moving up into Friday, now the CFTC information is only good through Tuesday's trading. That means I don't know what they did on Wednesday, Thursday, or Friday. But since I know that they're big money and they were building a position, I don't think for a second that they were trying to duck out of a position. And instead, they were even selling more up at the highs out there. On the weekly chart for gold, it's going to be important this week here for gold to maintain the trend line. That's really the next area of target. And if you take a look at that trend line, what I'm referring to is the high from October 5th. Inside gold, that's at 1798.10. Your next touch point is going to be that key reversal session, March the 21st. That high is 1392.60. What you'll see is price so far, and this is only Monday, what price did was it stopped right at that trend line that it had broken out of. But it didn't break out with conviction. That's the only problem. Nonetheless, it is back testing that trend line. If it ducks back inside, that sets up two possible outcomes, a minimum of two outcomes. One is moving down to the 1248, 1258 area. The second outcome is moving all the way back down and having a triple bottom filtered test, moving all the way back down to the January level out here. If we take a look at just simply retracement areas, of course, there's some other intermediate side roads, some other intermediate retracement levels. 1280 could be the 0.618 retracement level that price could stop at. Maybe it's 1263. We'll know as we take a look at volume. Here's what we want. We want volume. It accelerated today, but it was less than the breakout session that it most recently had. So that's bullish. I say, if you take a look at these big humps on my screen, these are cycle patterns. They represent about a 13.5-month cycle. And what you'll see out here, if you just take a look at, quite frankly, the last two, meaning the low back in June of 2013, the low back here in January of 2014, and what this is suggesting is right around now that we see another push lower out here, securing a nice big bottom inside the marketplace. So everything is really set up for gold to move lower. Look, what I can't control is what the markets are going to do next. What you can control is where your stops are. So make sure when you're trading, you use a bracketed order. What does that mean? That means that you've got a target to the upside if you're long something, and you know where your stop is at. Make sure that you have that in place. Let the market do its thing. Go ahead and manage the trade, identify your targets, and then go out and get some lobster. Go out and have some fun. It is summertime. Play a little tennis. Play a little golf. Do whatever it is that you're going to do. But please make sure that you are trading with a bracket on everything, because you can always get back in if you get stopped out, either because you had an exit strategy and it hit your profit target, or because it hit your stop and you want to go ahead and reassess. So, folks, thanks so much for joining me here on the Tom O'Brien Show. Again, I'm your guest host, Steve Rhodes, filling in. Tune in each morning, 9 a.m. on TFNN.com, and I'll look forward to seeing you soon. I hope it's really soon out there. Have a great evening. Take care, and we'll see you.